Hello and welcome. You're watching Business Today TV. I'm Sakshi, Batra, and this is Market Today, a show where we'll help you understand all the closing action on the D Street, starting with the benchmark index moves, moving on to the sectoral indices, and also the individual stocks that are moving the most in trade as well. Let's look at how the markets are trading before we go ahead and get you the expert views as well. The Sensex is down by 137 odd points at this point in time, hovering near 59,588. Talk about the Nifty as well. That's down by 40 odd points at 17,620. Odd levels. That's a cut of almost 0.2% at this point in time. Let's look at the broader markets that have been holding the fort through the trading session, but are they also looking at a selling pressure really being on? Yes, they are. They've now slipped towards the closing, towards the lower point of the day as well, about 0.07% of a decline for the small cap 100 index. Let's also look at how the mid cap 100 index is faring. Slightly better off, but absolutely flat in trade with a negative bias. There has been just a recovery in the last few odd trading seconds as well, as far as the mid-cap 100 index is concerned. But it's the Nifty IT index that's been the biggest culprit in today's trading action, dragging the overall sentiments on the D Street with respect to the benchmark indices as well. The Nifty IT continues to drag right ahead of crucial numbers of Q4 coming out with some bellwether companies like HCL Technologies that will be reporting its numbers tomorrow. But this reaction is as a follow-up to Infosys, TCS and the earnings downgrades that we are seeing. HCL Technologies, meanwhile, down by 2.2% towards the day's low, right ahead of the numbers. So some more nervousness as far as the IT pack is concerned. We'll take the experts' view on the IT pack as well. But for now, what's doing well in this otherwise lackluster market is metals, which are shining brighter, about half odd percent up in trade, 0.6% of an upside can actually be seen on that one. Apart from this, you do have some other sectors as well that are absolutely flat in trade, very, very choppy. The auto sector is flat, absolutely. The pharma index has been holding on to some positive gains and still is up about 0.2 odd percent in trade right now, but not too much of gains also coming in right here. Mixed trade as far as the Nifty bank is concerned with respect to financial services, PSU banks and the private banks. The oil and gas is in fact moved to the higher point of the day, 0.2% uptick for the Nifty oil and gas space. So keep an eye out on that as well. Slight gains coming in on the realty pack as well, but we'll see how the markets really shut shop. About 20 minutes remaining for the markets to shut shop in today's trading action as well. Let's welcome our guest on the show. Divam Sharma joins in. He's the co-founder of Green Portfolio. Mr. Sharma, good afternoon and thank you so much for taking the time out for this discussion. First up, your take on the market outlook. We've been seeing 2 or 3 trading sessions of consolidation. Will this continue for some more time before we actually see a movement on the top? And what will it really take for the markets to come out of this consolidation zone?
So actually, we are looking at so post the RBI action earlier this month, we had seen a rally in the markets, and we are now seeing some bit of consolidation in the markets, as we have already seen a good rally. We believe that next trigger for the markets would be the US Fed action,
Okay.
and that if the Fed holds the rate this time, it will be a very positive move for the markets. And but for India perspective, we believe that the tables have turned and the sentiment has turned positive from that aspect. We have already seen some bit of positiveness coming from the FPI action. And remember, when the FPIs come into the markets, they will take the markets to new highs.
Yeah.
So we believe that it's a good positive market, but waiting for US Fed to follow up on stopping the rate hikes.
Yeah. What about the IT pack, and how are you assessing the earnings that have come through already, the earnings downgrades that have come for some of the stocks like Infosys, for example? We did see a sharp reaction on an intraday level as far as post results interaction was reaction was concerned, but the markets have still not been able to come out of that zone, despite the kind of move that we've been able to see on some of the other indices as well, because most of the other big IT majors are still remaining to come out with their earnings. In fact, all the IT stocks are down in the red right now as we speak. Your own thoughts on the IT pack? How are you looking at them?
See, we believe that this is the last leg of panic in the IT sector.
Okay.
We have already seen IT stocks bleeding over the last 1 year. Like we believe that this like what we feel is that the order book outlook uh, the panic for that has already been priced in. And say another 5-7% or 10% kind of a correction will be a good value buy opportunity for the IT stocks. Although having said that, we believe that it could take another 3 to 6 months for the IT stocks to settle down and then start a rally again. But IT sector looks really promising if you look at it from the next 2 to 3 years standpoint.
Okay, and amid the earnings season, where exactly are you really taking positions as of now? Some of the sectors where you're bullish, and on the other hand, where are you looking at some underperformance creeping in? How would you really advise investors to really move ahead and strategize their moves ahead of the Q4 numbers?
See, despite the markets, despite the Nifty index stocks slightly under consolidation phase, what we are seeing is in the past few days, a lot of small cap and mid cap stocks have done exceedingly well. There are a lot of stocks which have gone in upper circuits, and the reason behind it is valuation comfort. So if you look at the valuations of small and mid cap, the price to earnings have uh, in a lot of spaces reached the 2020 lows. So we believe that a lot of value opportunities have come up in the small and mid cap. You have to be selective, but there are a lot of multi-bagger opportunities that have come up. You have to look at sectors like pharma, chemicals, which have not seen a run over the last 2 to 3 years and have corrected. The fundamentals have still been intact, but the valuations have corrected more than the fundamental drawdown. So we believe that sectors like pharma, chemicals, textile, infra, we believe that there's a lot of focus on infra and related sectors, and that should do well. We believe that auto component should do well. So you have to look at sectors where there is import restriction and there is export. So China plus one beneficiaries. A lot of very small companies are benefiting big time, increasing their capacities multifold, where they are benefiting from import restrictions from China and export opportunities to the rest of the world. So there are a lot of value opportunities cropping up. You have to be stock specific. I think you should look at the broader markets while investing in these times.
Okay. I also wanted to ask you about some of the stocks that have been in momentum so far this week. You know, we did see ITC crossing the 400 mark for the first time, reaching an all-time high. Then we saw DLF reaching its 52-week high as well, amidst the movement that we are seeing in the realty pack as well. Divis Laboratories from the Pharma pack has been leading for last few trading sessions as well. How are you looking at some one or two, three names that I've just taken from their each respective sectors as we speak?
See, FMCG, we believe that the rural stress has almost been priced in, and gradually that rural consumption should come in over the coming months. We still believe that most of the value opportunity out of ITC has already been played out. You still have to remember that it's a conglomerate play where there are a large like there are 2 3 key businesses which the company has. So you'll not get exactly valuations of an FMCG stock over there which are high multiples. So we
Yeah.
believe that till the time we get a good and also not to forget that we do not have a, a management that is there, that there's no there is professional management, but there is no as such any family running the show. So that obviously tends to get the company into a discount. So ITC, we believe that most of the value play has played out, and there is not much run left in the stock. From the pharma standpoint, Divis Lab, we believe that it's a great story, and it should do well. The pharma story has just started, and it should do really well going forward.
Okay, understood that. What about these new age tech stocks? Some of them are again coming on the top brokerage houses radar, like a Zomato, for example, that was up in trade. Some of the broking houses have come out with reports looking at a 30% upside from the current levels as well. Now, we are yet to see how the Q4 really pans out for these new age stocks, but some of them had started to show some kind of positive sentiment in the last quarterly earnings as well. Are you looking at positively in any of the stocks from this realm?
See, there could be some trading bounces in these stocks over the next few months as the markets rally. But from a long-term standpoint, we believe that profitability is the key. The kind of investors that you get when you are unlisted and the kind of investors that you get when you are listed, they are completely different mindsets. So if you are looking at investing in these new age stocks, definitely they have created a mark. Definitely they have grown. They have they have a great market share, and these players are here to stay. But if you are eyeing for a re-rating in the stocks, you have to wait for the profitability to come on a consolidated level and that to sustain. So investors should rather wait for the profitability to actually come. They might be paying 10, 20%, 30% extra at those times, but then you have more certainty. So for the new age stocks, I would say it's still a wait and watch. Let's see how Zomato delivers a profitability by 2025. And when it actually comes, then invest.
Okay, understood that. Well, thank you so much, Mr. Sharma, for being with us and discussing with us all these various stocks and sectors where opportunities can be scouted by investors in this current very, very choppy and consolidating kind of a market scenario that we are looking at right now. Let's look back at how the markets are trading at this point in time. Still about 130 points of a loss for the Sensex. It's trading below 59,600 mark, about a cut of 133 odd points. The Nifty is down by 40 odd points and it's now hovering near 17,600 kind of a level. 0.25% of a fall for this one, but we are still about 12 minutes away from the market close of the day. We'll keep watch on how the markets are moving at this point in time and how do they shop. Could be perhaps the third consecutive session where we do see a muted closing for the markets. But we'll keep an eye, and so should you. Be with us on Business Today TV. Continue to engage with us on our social media platforms as well to catch all the updates from the world of stock markets. Until then, thanks for tuning in.
Ladies and gentlemen, on Tech Today, we have a very special guest. In fact, one of our most special guests yet on the show. I'm joined by none other than Tim Cook. Tim, what a pleasure to meet you.
What a pleasure to be here. And hello, everyone.
Hello, but we got a namaste moment when you did open the first Apple store over here.